I think most traders are trying to solve the wrong problem. Alright, I'm just gonna jump straight into the video. As you guys know, I don't do editing, I don't do anything. Everything that I teach, everything that I say is just simply raw and no cuts. Alright, okay. The reason why I started off like that is because everyone that I know, right, thinks that they're losing because of bad entries. Alright, I mean at the start. Alright, and why is that? Because they spend months or weeks learning one concept and then trying it out and then thinking it's not working, and then either they jump strategies or they learn something else and try to add on to what they actually learned at the start. For example, right, let's say you're a beginner trader and you just started trading and you learn the concept of fair value gaps. All right, so what are you going to do? Fair value gap, right? Fair value gap is basically a three candle pattern where there's a gap in between like this. All right, let me just zoom in. All right, and they'll be like, okay, cool. All right, I have a fair value gap here. Right, price is going to tap this and reject. Right, this is basically what they do, right? All right, taps and rejects. Now maybe I have a fair value gap here, so I want to react off this fair value gap. And the moment they keep saying that the fair value gap is getting broken, right, it's not reacting from it, they think that, oh, okay, fair value gap is not working anymore, right? So what do, right? They start to add concepts, right? Then they learn market structure shift. All right, so in this case, if I only see a tap of a fair value gap and then a market structure shift, then I will take a trade. Now, what is a market structure shift? Market structure shift basically means that the market is making high highs, high lows, right? Like this. And then suddenly it just goes down and breaks this. Now, this point right here is a market structure shift, because why? The market is shifting its upward trend, right? So that's what they do. So let's say they're adding the concept, right? So now they have a fair value gap, it's reacting, and then now they want to be like, when I get a market structure shift over here, all right, then I'll take the trade. Cool, I have a market structure shift. Now I want to take a trade over here, put my stops above the fair value gap, and maybe aim all the way down here. Well, it may work, but not all the time, because you don't have it. Look at that. It ran up to retest the fair value gap, hit you on your stop loss, right? And then decides to move down. Now, for a beginner trader, they will be like, okay, now market structure shift is also not working. Maybe I need to add liquidity. Then they spend months and weeks learning liquidity, right? So now the same thing, right? Let's go back. Now what do they have? Fair value gap, right? They wait for a tap. Cool, they have a tap into the fair value gap. Wait for a market structure shift. Now they have a market structure shift. Right, oops, I marked the wrong one. My bad, my bad. Fair value gap. Right, fair value gap. Market structure shift over here. Now, what is a liquidity? Liquidity is basically points where a swing high and swing low, right? Let me just keep it simple. Swing high, swing low. So this is a swing high. As you can see, this, let me change the color, right? This red line right over here, right? That's a liquidity. Now they'll be like, okay, I have a liquidity sweep. Then now I can take a trade to the downside, right? Stops above the liquidity sweep and then aim the lows. Let's see what happens, and bam, we hit full TP, right? But that is not the case for every single trade, right? Let me show you an example. Yeah, this is a best example, right? What do you see here? Fair value gap. Let me go back. Fair value gap, right? Next thing, what do they look for? Market structure shift or liquidity sweep, right? Don't have a liquidity sweep, or we have a, what is that? Market structure shift right over here, right? Have a market structure shift there, and then wait for a liquidity sweep, At this point, they have a liquidity sweep, or even this, right? You have a liquidity sweep, and then they wait for a market structure shift. You get a market structure shift right over here, and then you take a trade here, stops here. Maybe your TP is at the high over here, right? And then they just take a trade and they wait. And what happens? They still lost, right? Why? Everything was there. Fair value gap was there. Liquidity sweep was there. Market structure shift was there, and they still lost. Now, why is that? Right? The reason being is when this doesn't work, they learn another strategy or they add on more concepts and all that. Now, trading is not about adding, canceling, and all that. Okay, you need to understand this. All right. Here's the problem. If your daily bias is wrong, right, every setup that you take against your daily bias is like you're fighting the market, right? Now, let's use the same concept, all right? Same concept. Let's go back. On this day, basically, if you guys don't know what's a daily bias is basically finding where the market is most probably going to. Like you have a higher probability where the market is moving into. Now, let's just say for an example, we are trading on this day, right? Then you have so many opportunities to buy, right? But your daily bias on the higher time frame is showing you that no, we are going down, right? We are selling. All right, cool. So since it's only selling, then I'm just gonna find selling setups, right? Like I could take here on the retest of that fair value gap, it will still go down, right? If I take a retest on this fair value gap, I would be aiming for it to go down, right? Look at this, right? I would be still aiming for it to go down. Why? Because my daily bias is telling me that I'm bearish, right? No matter what, I will still take ideas that is telling me that we are going down. And look at that. You'll still hit with whatever strategy you have. You will still hit because your daily bias is there. Now, this is definitely hindsight, right? Because I already seen what the market do and I'm explaining it to you and all that. All right. So, with that being said, you guys may be thinking, is daily bias really necessary? I'm a scalper. I mean, if you trade without daily bias and it works for you, then it works for you. But one thing that I've realized in over the years of trading, right, it's better to know where the market is heading and to trade because you will avoid unnecessary losses, right? This was the mistake that I was making all this while, that I couldn't understand the concept of daily bias. I couldn't understand the concept of where the market is going. I can't read the market. So what I did, I took a break and I literally just made months and months, right, of learning how to read these candles. What is the candles telling me? Now, trading is basically a language, right? All these candlesticks are giving you a language. It's teaching you a language, all right? It's just that you have to put in the effort to learn the language, all right? I'm not going to keep you just there and saying that, oh, you got to learn this and learn that. No, but when you learn daily bias, right, it's going to help you drastically. Now, I'm going to show you an example of a trade that we actually took this Friday, actually Friday and Thursday, but I'm just going to show you one of the example, all right? So on Friday, right? Yeah, cool. Let me go back a little. 9:30. All right. So for those of you who don't know, I trade the AMD PO3, but it's my version of AMD PO3. So it's a little different from how people trade it out there. But overall concept, it's about the same. All right. The only indicators that I use is fair value gaps and the PO3 candle, right? And that is just to make my life easier and not to use this to figure out blah 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 and all that. Okay. So now this video is about showing you what's the importance of daily bias. I'm not going to go through the daily bias, all right? I'm going to go through it briefly, but not in depth, because I've already made a video in depth about daily bias. You can go and check out the video. And let me just show you guys briefly, all right? Normally when I do daily bias, I go to the weekly, daily, 4 hour, 1 hour. So in this case, on the daily, right, I see what the last move is telling me. In this case, this was the last move right before the move up. That was a sweep. Now, a sweep is basically telling me what? That this is possibility that we are reversing and going up. Cool. If we are going up, right, where can we go to? We can go to these highs. Cool. I have my range on the daily. Now let's go to the 4-hour. 4-hour, this was a fake out. Why? Because we saw on the daily, right, it was a sweep, right? So this was a fake breakout. So those who trade support, resistance and all that, they would have gone sell here and then try to capitalize on the sell move, but instead the market just reversed and moved up. Now we're going to use the same concept, right? What was the last move? The last move was that we were disrespecting all this bearish fair value gaps. Cool. So if we are disrespecting bearish fair value gaps, what does that tell you? We have possibilities of moving higher, right? So if this is moving higher, where is it likely to reverse from? We could reverse from this swing high on the 4-hour. We could also reverse from this swing high on the 4-hour. Cool. So these are my reversal points on the 4-hour. Now, that is not enough. We need everything to align. So let's go to the 1-hour. Now, what is 1 hour telling me? 1 hour is telling me that, all right, I respected this fair value gap. I moved up. I closed above this. So this shows me that we are bullish, right? Cool. We are bullish. Now, we went back down, right? We went back down showing bearish intent. And then the last move it made was disrespecting this fair value gap. Now keep in mind, this 1 hour candle is still moving, so I'm not gonna care about it because it has not shown me its move yet, right? But it's still moving. Cool. Although we respected this, right, in the previous move, what happened next? We went down, right? We reacted of this tiny fair value gap, right? If you can see that tiny fair value gap, this bullish fair value gap, we reacted of this. Although we closed below, the next candle shows me that it's moving up, right? Because why? My daily is bullish, my 4-hour is bullish, right? So I would wait for the 1 hour to turn bullish and then find a trade. Now, if my 1 hour needs to be bullish, what does it have to do? It has to close above this fair value gap. It has to close above this fair value gap, right? And then I'll be like, okay, for sure, I'm bullish, right? So if I want to reverse from this, what will happen? Or where can I reverse from? This swing high, right? Now keep in mind this. I know it's getting confusing. Don't worry, it will make sense in a while. My 4-hour, what was it saying? What was the last move? Bullish. My daily, what was the last move? Bullish, right? So if 1 hour closes like this, right? Even let's say at this point, it closes like this, respecting this 1 hour fair value gaps. What does that tell me? Are we reversing? Yes, we are reversing, but is it a full-on reversal? No. Why? Daily bullish, 4-hour bullish. So what is this? This is a retracement. Now you can do two things. You can either find an entry with the retracement, try to capitalize on the retracement. That's up to you. Or if you want to be even more like, I only want to take A+ setups, you can wait for it to turn bullish, right? Wait for the 1 hour to align with the 4-hour and daily, and then find an entry to take a bullish setup. Cool. For me, the way I trade, I do tend to capitalize on the retracement. Let me explain to you why. All right. So for those of you know, I trade the 10 a.m. PO3. All right. So I waited for this candle to close. Now, how did this candle close? This is the 1 hour candle, that the 9 o'clock to 10 o'clock candle, right? So 10 o'clock closed like that. It tapped the 1 hour swing high and rejected, right? So what does that tell me? All right, at this point, this could do a possible retracement. Now, using the same concepts, right, I'm going to give you a clue. How are we finding this? Only fair value gaps and swing points, right? So now, if this was to reverse, right, where is it going to reverse from? Right, from a swing high. Cool, we have that. Now, if we are having a retracement and we are expecting a bullish move, where should it retrace to? Right, either a fair value gap or swing low, right? Where is the next swing low? Is this. So what would I expect? I would expect 1 hour to retrace all the way here to sweep this, respect this, and then continue higher, and then I can find a bullish setup, right? Or let's say it wants to do a deeper retracement, it's going to go here, right? Same thing, right? Here and all that. the only time that I will think that, okay, we are going to drop lower, right, is when this 1 hour and this 4 hour swing low. Now we're on the 4 hour, right? This becomes a swing low. If this swing low gets disrespected, then I'll know that we are turning bearish. Why? Because 4 hours turning bearish, 1 hour is turning bearish. So we are becoming bearish. Until then, nothing. So at this point, right, 1 hour showed me this, so I wanted to capitalize on the retracement, right? My students on the mentorship was with me on this, so I train students one-to-one. Whoever's free on the day, they will just hit me up and ask me for a call, and I'll just join them on the call, and I'll tell them what is right, what is wrong, and all that, right? So if you guys are interested in joining the VIP, where I teach this whole strategy step by step, or if you want mentorship training where I work one-on-one with you, join the Discord. The Discord link is below. Just copy the Discord link, paste it on your browser, and you'll be there, and we can talk in the Discord. All right. So let's get back to the charts. So we had a retracement here. For those of you who know what I do, I wait for a 15-minute SMT, right? So we had a SMT retracement somewhere here, right? We had a SMT divergence, sorry. We had a SMT divergence. So next thing I did, I went to the 1 minute. I waited for a CISD. For those of you who don't know what's a CISD, CISD is basically the last body candle closure, right, of the down move before it made the up move, right? So which is this. So in this case, we already had the CISD, but of course, I have ways to see whether the entry is still valid if it taps, right? So we had a retest over here. This was 39.75 entry. So we waited for a retest and we simply aimed a 1:2. Why did we not aim more, right? We could have, but the thing is, this is a retracement move. I'm not willing to keep too long because it can retrace anytime. By using daily bias, we only have a probability. It's not saying 100% probability. It's basically just 80% probability, right? So we waited for a retest. We tapped in, and then this was the emotional roller coaster. We were going so close to our stop loss, as you can see, right? But what are we doing at the same time? We are respecting this 1 hour swing high, right? Cool. And then price just melted straight to our TP, right? And we made about 800 just in that trade. Now, the point of me showing this and all is not because I want to show you that my strategy is awesome. No, every strategy is awesome. Every strategy works. But the main thing behind it, right, is daily bias. You need to know where the market is trending, right? So this is the most important thing. Honestly, I had better entries than this in the past, but then again, if my bias was bullish, right? If I was to still stick to my bias, no, I'm only bullish. I only want to find a bullish setup. I may have gotten a setup, I may not have gotten a setup. But because I saw how it reacted, I had the idea that, okay, this is a retracement. I want to take a trade. Anything could have happened here. The price could have just stopped us out. But did it? It did not, right? Because we had all our rules in place with the trend and the higher probability with how we saw the daily bias, right? So initially, I'm just trading with my bias. I'm not trading against it, right? So I have wrote down a few things here. Let me just copy and paste it. All right. So this is the wrong process, right? This is what you should never do, right? You find your entry, then your confirmation, then your risk, then you find your bias. No, this is not how it should be. All right. What is the correct process? Now, correct process basically is this is your correct process, right? You need to find your bias first, right? And then if your liquidity or your setups, right, your rules has to be there. Let me edit this. Liquidity rules, your confirmation, your entry, and finally your risk management. If you know something is wrong, get out of the trade or risk lesser. All right, so we have come to the end of this video. Now, if there's one thing I want you guys to take away, is this: your job isn't to find, your job is not to find trades. All right, keep that in mind. It's never to find trades. right? Trading is a zero-sum game. It's never to find trades. Your job is to eliminate the bad ones, right? Only take the good ones. So this is what I'm leaving you guys with. All right, in the next video I'm going to show you exactly how I build my daily bias every single morning before I even think about taking a trade. So hit the subscribe button, hit the bell button, so that you guys will get the videos there whenever I post, right? So this video is basically, I'm going to upload it right now. So today's Sunday, so the next video will most probably be out on Tuesday, right? And the third video will be out on Thursday. All right. So with that being said, I'll see you guys in the next video. Peace out.